Welcome to Byte-Sized Tech. This week, we are deconstructing the AI gold rush. From stocks that are just soaring to these multi-billion-dollar deals, the whole AI boom seems to be in complete overdrive. But what's really going on beneath the surface? Is it a bubble just waiting to pop, or is this the actual foundation of a whole new economy? Let's dive in. All right, so here's our game plan. We're going to follow the money. We'll start with all that market frenzy, then we'll dig down to what's really driving all of it. We'll see who's building the actual engine of AI, figure out how software companies are trying to navigate this crazy new world, and then, finally, we're going to ask the big one. Where is the actual payoff?
So first up, the hype machine. And right now, it seriously feels like we're in a market where if you just whisper the letters A and I, a company's stock can just shoot for the moon.
Yeah, there's actually a name for it. They're calling it the OpenAI Golden Touch. It's wild. Companies from Figma all the way to Mattel, yep, the toy maker, have seen their stocks jump just from a casual mention by the AI giant. It just goes to show you how much pure excitement is driving this market.
And it goes way beyond just mentions. Take Dell, for example. They are seeing so much demand for their AI servers that they've pretty much doubled their growth forecast all the way out to 2030. Now, this isn't just talk. We're talking about a massive backlog of real, actual orders. And that leads to the critical question. Is this whole thing just speculative hype, or is it actually rooted in something real, something tangible? Where is all this demand really coming from?
Well, the answer really boils down to one fundamental need, this absolutely unquenchable thirst for raw computing power, or what the industry just calls compute.
Get a load of this number. 800 million. That's the number of weekly users on ChatGPT alone. That's nearly 10% of the entire world's population using a single AI service every single week? It's a staggering figure, and it points to a global appetite for AI that is just completely unprecedented.
Now, just think about that for a second. The company at the absolute center of the AI boom is openly admitting they are tremendously constrained. Even with all of their resources, they just can't keep up. That leaves huge amounts of potential demand completely untapped, all because they simply don't have the processing power. And you hear this sentiment echoed all across the industry. It's become a flat-out race for raw processing power. And this demand is creating what one executive called a systemic imbalance in our infrastructure. There just aren't enough chips, not enough servers, and not enough data centers to go around. So, if the demand for compute is the new gold, then who's selling the picks and shovels? Well, that brings us to the engine of AI itself. You can actually break down the entire AI infrastructure stack into 3 key layers, and it's pretty simple. First, you've got the chip makers. They're the brains of the operation. Then you've got the companies packaging those chips into these incredibly powerful servers. That's the body. And finally, you have the massive data centers that house and power it all, giving the whole system a home. And to put this into perspective, just one of those data center players, a company called CoreWeave, recently announced it has a contracted power pipeline of 2.8 gigawatts. That's enough electricity to power a major city. It really highlights the mind-boggling scale of the infrastructure that's being built right now. So, while the infrastructure players have a pretty clear path forward, the story for software companies is, it's a lot more complex. They're basically facing this huge opportunity on one hand and an existential threat on the other. And this quote from analyst Janet Mee just perfectly captures that uncertainty. For every potential winner out there, there's a huge risk of being made totally redundant by a more powerful general-purpose AI model that can do its job and probably a whole lot more. This whole situation has basically created 2 distinct worlds in the AI economy. On one side, you have the infrastructure builders, what a lot of investors are saying as the sure bet in this gold rush. And on the other side, you have the software prospectors. They're the wild card, where, fortunes are going to be made, but the ultimate winners are still completely unknown. So, facing all this uncertainty, the strategy that's emerging for software isn't really to compete, it's to partner. We are seeing this huge wave of collaboration, where companies are integrating with the major AI platforms instead of trying to build everything from scratch. You could call it a strategy of survival and symbiosis. This all sounds pretty promising, but it really brings us back to our original question. Where is the tangible value? Is anyone actually making money from this yet, beyond just selling the hardware? Beyond all the vision and the promises, where can we actually see that this investment is paying off? right now?
Well, analysts point directly to corporate earnings. It's not about future potential anymore. It's about what companies are reporting today. The proof, as they say, is in the profits.
And the numbers? They're really compelling. Hyperscalers are delivering double-digit earnings growth, and analysts are attributing a huge chunk of that directly to AI. We've seen Meta's core advertising business get completely transformed by it, leading to what they call very high double-digit percentage uplifts in performance. It's massive. So the key takeaway here is that this isn't some story about the distant future. The huge investment in AI infrastructure is already generating significant, measurable profits for the biggest players in tech. The value is here, and it is here right now. And that really leaves us with a final thought. We've seen the hype, we've seen the demand, we've seen the builders, and we've seen the payoff. The machine is running. So now the race is on to see who's going to get to steer it. If you enjoyed this episode, please like, comment, share, and subscribe.